Economic conditions can shift quietly before markets react, and without a clear signal, it's easy to stay exposed to risk longer than you should or miss the early signs of recovery. The Beacon Outlook strategy is a collection of tactical, data-driven investment models built to respond to changing macroeconomic conditions. These models dynamically adjust market exposure in response to shifts in economic data, positioning more aggressively when indicators point to strength and moving defensively as the macro environment weakens. At the core of each strategy is the Beacon Economic Index, a proprietary tool we use behind the scenes to measure the strength of the U.S. economy and guide our investment decisions. The index distills a range of fundamental data, employment, income, manufacturing, and inflation, into a clear, easy-to-understand signal that helps inform investment positioning. When the Beacon Economic Index shows strength, models in the Outlook strategy lean into growth, favoring equities or credit-sensitive fixed income. When the index weaken, they reduce risk, shifting towards higher quality fixed income, cash, or other defensive allocations. This adaptive approach adds structure and objectivity, helping manage risk without relying on predictions. It also adds discipline. We're not reacting to headlines or market noise, but responding to measurable, fundamental shifts in the economic landscape. Instead of relying on opinions, forecasts, or gut feelings, we let the data do the talking. This gives us a clear, objective view on how the economy is trending, whether it's growing steadily, cooling off, or showing signs of stress. For example, the Outlook dynamic allocation model adjusts allocations across stocks, fixed income, and cash based on the direction of the Beacon Economic Index, seeking growth when the economy is strong and caution when it's not. Following a similar process, the Outlook Enhanced Income model focuses on credit and interest rate exposure, dialing risk up or down depending on the economic data. You don't have to interpret economic data or guess where the Fed is heading. That's our job. The Beacon Outlook strategy keeps us grounded in fundamentals so your portfolio stays aligned with reality, not speculation.